Here in this webinar this week, I got to tell you first off, we got great weather here in southeast Wisconsin. It's been slow planting, but hopefully we can get to the field here in the next couple of days. And as we visit with producers, we know some of the spring work was starting to get done. But with this volatility of the markets, we just need to take a step back in here and look at some of these charts. I got to tell you, today it's been really a big change on trade. To start the day, we had corn trading about a nickel higher. Now as we walk in here, we're down around 4 cents. Beans were up 12. Now they're trading a bit lower. Wheat was up more than 20 cents. Now that is weaker as well. But when we get to this corn market here, we just got to really realize we're moving into some key resistance areas. We can look at a retracement resistance at 496 and a half. We can go with a January high close at 498 and 3/4. We have $5, a January high trade at 502. And then there's this gap up at 503. So taking a step back, it tells you major resistance is in this 497 to 503 area. And we've challenged it a few days this week and have failed each time. Our order to make another cash salesman sitting just above the market, and we're coming up just short. And now we got to wonder if we have to lower that down. We need to keep in mind, though, that if this market does shoot higher and get above 503, there's really nothing stopping us to 5.25. Our fear, though, is there's just a lot of sell orders sitting above this market, and this weather is a bit non-threatening. Now, we know the supply and demand report from last week offers it some support, but as we move into June, all the focus will be on weather. As we get over to the bean side of it, we sent a text out today on making another cash sale on soybeans at 12.15, and we lowered our previous orders because of that supply demand report last week. It did offer corn some support, but overall, the numbers on beans were a bit negative. Now you look at this bean chart, it's similar to corn. We got resistance at 12.20, then again at 12.43, and a gap area up at 12.44 and a half. Our read is this market is stalling out in here. That's why we like making sales. We still feel we're a bit behind on beans. Our goal is to at least have 30%, maybe up to 40% as we head into the growing season. Now, if you want to be bullish and you're looking for these markets to break the resistance and move higher, you got to like the Chicago wheat chart. You can see when it got above last fall's high and above the 50% retracement, we quickly shot up near $7. Today's high in July Chicago wheat is at 697 and a half. Now, where wheat is a bit different than corn and soybeans, wheat has the world markets leading us higher in here because of the issues with the Russian crop. The other thing is it seems like the specs are having a bit more success in moving wheat compared to that of both corn and soybeans. So what do we do right now? Well, I got to tell you, we just are not believers in planting delays, okay? As we visit with producers, and here are some conversations today. Missouri, the first thing out of the farmer's mouth was, boy, we haven't been able to plant in the month of May. When I asked him how his farm was, all done with corn, 80% planted on soybeans. I move into south central Illinois, and generally you can find producers about half done. As you move into a wet area of northeast Iowa, guys are just starting to get in the field today. And like one producer reminded us, I started corn yesterday, and 3-4 days, I'll be all wrapped up. I moved out to Nebraska. You had guys wrapping up corn planting and looking towards finishing up beans this week. And pretty good progress has been made in Minnesota and South Dakota as well. Therefore, we're just not a believer in planting delays. As we mentioned on yesterday's report, our planting progress is pretty close to average. A lot can get done with in a hurry. We're sticking with rewarding rallies. Our question right now is, do we lower another objective down on beans, or do we still have some more left into this market? Our gut right now, and we're afraid to say this a little bit because it's not what you want to hear, is that some near-term highs are in place and that you could have corn roll down to 470 and you could get beans down to the 1175 area. When making sales or not choose to make a sale, what you need to ask yourself is, what will you regret the most? If you can handle making a sale and the market going up, make the sale. If you can't handle the market going down and no sale being made, you've got to get something on the books. Our bias right now is get something done, That's how we feel with this market on this recent push. Any questions, feel free to reach out to us. Have a great day.